While many AI ventures have opted to stay private, a select few have made moves into public markets. Among them, CoreWeave stands out, not just for its rapid ascent, but for its strategic entanglements. After all, it's Nvidia's largest IPO investment to date, and the relationship goes far beyond capital. CoreWeave's biggest customer? Well, it's Microsoft. That places CoreWeave squarely between two tech titans whose combined market cap exceeds $8 trillion. In this video, we'll examine AI-centric IPOs and CoreWeave in particular. I'm Geis, and this is AI Venture Watch. All right, so we have a scene currently that's empty, but we're going to add in companies that have gone public. Again, these are AI-centric companies. Over the last couple years, companies that have gone public. So let's run this query. And what comes back is a set of companies. I think there's about a dozen. Let's look at a few of these, not all of them, but just to see who some of them are. Here's Tempest AI, a personalized medicine company. Here's the Hesse Group, which is in autonomous vehicles and advanced driver assistance systems. WeRide, also in the same space, autonomous vehicles and ADS. We're not going to examine these companies in detail. We may do so in another video, but not today. ARM is a semiconductor company. Many of you know them. They're majority owned by SoftBank, but in the public market. Here's Clavio, which is a sales and marketing tech company. Silvaco, a semiconductor analytics company. So you can see a sampling of the type of companies that have gone public that are AI-centric in the last couple years. But the company we want to concentrate on in this video is CoreWeave. Now let's take a little look at some details about CoreWeave. Notice that it is what's called a neo-cloud company. That's a specialized AI cloud provider that's focused on providing AI services in the cloud. Its energy strategy is different than many other hyperscalers in that it's vertically integrating. It's gaining direct control over its power. For example, it has a pending large $9 billion stock-for-stock acquisition pending for Core Scientific. Stock-for-stock is interesting in the sense that the shareholders of Core Scientific are somewhat dependent on the volatility, and we'll see the share price of CoreWeave is volatile. They're dependent on the stock movement price. I don't think there is what's called a collar on this transaction, which means that there's a heightened dependency for Core Scientific shareholders on the price movement in CoreWeave. In any case, it is acquiring Core Scientific, a former crypto mining company, to give it more control of its own energy. Now, CoreWeave has enjoyed explosive, though highly concentrated, as we'll see, revenue growth, but it struggles under a interest debt load from very large capital expenditures. So that's an overview of CoreWeave, but let's look at some specifics about it. Let's look at the IPO. The IPO was done, about 5 months ago, end of March in 2025. Its offer price was 40. Its first day trading was 40, so there was no pop, as they say. If you look at its latest SEC filing, which was on August 13th, its price before the filing, right before the trading day before the filing, was $148.75. Now, 5 trading days later, you can see the share price dropped substantially to $92.89, showing the volatility in the stock. The alpha return means market adjusted return from day 0, again, the day before the 10Q was filed, to the 5th trading day later is minus 35.7%. So it had a pretty rough 5-day period. Analyst rating on day 5, the mean was 2.82, 1 being buy, 5 being sell. So it's slightly favorable analyst rating. Let's skip down and take a look at some of the media coverage that occurred during the 5 days after that 10Q. Notice that CoreWeave is stated as an investment opportunity that is polarized. The word polarized is important to investors. There's strong supporters and some strong questioners due to its significant financial concerns, despite operating in the booming AI infrastructure market, which has been booming. There's some question at this point when I'm doing this video whether that will continue to boom or not. The company reported wider than expected loss and is adjusted operating income of $200 million. Now, let me just mention, adjusted operating income means that accounting operating income is adjusted by certain numbers which the company deems important to adjust it by. It's not following GAAP or generally accepted accounting principles, but it's adjusted. In this case, I believe most of the adjustment came from stock and expense, which is a non-cash expense, and CoreWeave is trying to show you what its cash looks like, but you always have to take into a little bit of grain of salt when we see adjusted operating income. But of $200 million, even with that adjustment, which makes it more positive than otherwise, the interest expense far exceeds it at $267 million. So it's got this debt load of $11 billion and needs billions more for capital expenditure going forward, which is raising questions about its financial strength. High valuation and what was coming at this time, an upcoming lockup expiration. In other words, insider shareholders were able now to sell shares for the first time, was putting pressure on the stock during this 5-day period of time. So you can see that even though the company is rapidly growing, it's facing some substantial financial pressures with respect to its debt load. Its revenue growth, annualized, I believe it's a semi-annual growth, is very rapid, 163.3%, but its free cash flow margin, negative 290.3%. That has to do with its free cash flow over its revenue. So you can see these metrics are kind of pulling in different directions. Extremely strong revenue growth, and yet it's extremely negative free cash flow margin at this time. And one other statistic here, the implied volatility, 103%. That's an option-related volatility measure, which shows the market views this stock to be very, very volatile and expects movement dramatically over the next 12 months. All right, so that's CoreWeave. And that's its IPO. But I want to show you a couple other things before we leave CoreWeave. I'm going to select it, and I'm going to bring out one of its investors. And you'll see that one of its investors, and by the way, it's a very thick line, which implies this is a major investment for Nvidia, as we'll see. Nvidia co-led CoreWeave's Series B when it was private at a valuation of $2.5 billion. I believe that was a couple years ago. Now, as of June 30th, 2025, Nvidia still owns over 24 million shares of CoreWeave. That's about 7% of the company. It is by far Nvidia's largest IPO investment. The valuation, it depends on the price of CoreWeave, obviously, is north of $2 billion. CoreWeave is Nvidia's preferred cloud partner, is a proven ground for its high-end GPUs and low latency networking equipment. So here is Nvidia with a very large major investment in CoreWeave as a strategic as well as a financial partner to CoreWeave. I want to show you one other thing. That is, let's look at a key customer. And what comes back, and let me rearrange this a little bit so it's pretty clear as to the kind of value chain that's associated with this. Here's CoreWeave. As we've seen, Nvidia, a major investor, a major partner, and look at the key customer. Its key customer It comes back is Microsoft. Now, Microsoft's customer relationship with CoreWeave helps Microsoft secure the massive GPU compute requiring for Azure. And in 2024, Microsoft accounted for 62% of CoreWeave's finances. And that could very well impact CoreWeave's investor confidence in its finances. Now, the Microsoft concentration is expected to decrease. CoreWeave is actively diversifying its client base through 2025. In fact, OpenAI has recently become a substantial customer of CoreWeave. But still, the concentration of revenue provided by Microsoft to CoreWeave makes it an intriguing dynamic. Here we have CoreWeave positioned between these two major players. All right, so we've explored the landscape of AI-centric IPOs with a spotlight on CoreWeave's NeoCloud trajectory. CoreWeave's reliance on Microsoft for revenue and Nvidia for supply creates a precarious position. It's not just a cloud provider. It's a strategic node positioned between multi-trillion-dollar giants. Is CoreWeave a disruptor, or is it a pawn in a larger power game?